You've got $100 sitting in your account, and someone convinced you that's not enough to start investing. That's the most expensive lie in America. If you're tired of feeling behind with money, hit subscribe and turn on notifications. Starting early can make a big difference. Even small amounts add up over time. While you wait to have enough, that 100 is shrinking, little by little, every single day. And here's the wild part. In 2026, $100 is all you need to get in the game. Let's be honest about something. Most people don't skip investing because they're lazy. They skip it because it feels like a private club. Wall Street, suits, big numbers, jargon that makes your eyes glaze over. So you play it safe. Leave money in a savings account. Tell yourself you'll invest later, when you have more, when life calms down. But here's the gut punch. As of 2026, average savings account rates are around 0.38%, while inflation has been about 4.2%. Rates vary by institution and may change, so leaving money in savings may not keep up with inflation. So the real question in 2026 isn't, can I afford to invest? It's, can I afford to keep waiting? Let's fix that. 6 simple moves. Part 1, the $100 myth. Here's what changed and why your parents' advice is out of date. It used to be true that you needed a chunk of cash to invest. Back then, you had to buy whole shares. If one cost $500, your $100 couldn't get in. That wall is gone. Today, almost every major brokerage offers something called fractional shares. In plain English, you can buy a slice of a stock instead of the whole thing. Want a piece of a company whose shares cost $1,000? You can put in $10 and own exactly $10 worth. Your $100 isn't too small anymore. It's a full ticket in. The barrier didn't disappear because someone got generous. It disappeared because the technology caught up. And most people just haven't realized the door is wide open. Part 2, where the money actually goes. So where does that $100 actually go? You need a brokerage account, basically a bank account that can grow. Link your card, move money in, and you're set. The good news in 2026, major platforms such as Fidelity, Schwab, SoFi, and Robinhood currently offer accounts with low or no minimums. Features vary, so check each provider's terms before opening an account. Fidelity and Robinhood even let you buy fractional shares for as little as $1. Now, quick honesty moment, because I'm not your financial advisor, and you should always do your own homework. These apps aren't all identical. Some are built for total beginners, some are flashier and made for trading. Pick the boring, well-established one when you're starting out. Boring is good. Boring is how you sleep at night. Opening the account takes about 10 minutes. That's it. That's the hard part everyone's been scared of. Part 3, stop trying to pick the winner. Now here's where beginners blow it. They open the app, get excited, and immediately chase the next hot stock. They throw their $100 at whatever's trending online. It drops 20%, they panic, they pull out, and they swear off investing forever. Don't be that person. The smarter move? Buy a slice of hundreds of companies at once, an index fund. The most famous one tracks the S&P 500, America's 500 biggest companies in a single investment. Historically, the S&P 500 has averaged about 10.5% annually, around 6.7% after inflation. Past performance does not guarantee future results. Every rolling 20-year period has ended positive. 3 out of 4 years are up. $1 invested back in 1957 with dividends reinvested, it'd be worth over $600 today. You're not trying to be a genius stock picker. You're just buying America's economy and letting time do the heavy lifting. If this is finally making investing make sense, tap that like button. It helps more people find this. Part 4, the tax-free loophole. Now let me show you a move that's completely legal and weirdly underused. When you invest, the government usually takes a cut of your profits. That's just taxes. But there's a special type of account called a Roth IRA, and it's one of the best deals in the entire financial system. Here's the magic. You put in money you've already paid taxes on, and then everything it grows into later comes out 100% tax-free. Every dollar of profit. No tax on the way out as long as you follow the rules and wait until retirement age. In 2026, you can contribute up to $7,500 a year if you're under 50, but you don't need anywhere near that to start. Drop in your 100 today. Most big apps offer them. There's an income cap. For 2026, you generally need to earn under about $153,000 as a single filer to contribute the full amount, which covers most folks just getting started. Same investment, same growth, but one pays the IRS, the other doesn't. Which would you pick? Part 5. The lazy genius move. Here's the habit that quietly separates people who build wealth from people who keep starting over. It's called dollar cost averaging, and it sounds fancy, but it's stupidly simple. You invest the same small amount on a schedule, say $100 on the first of every month, no matter what the market is doing. Why does this work so well? Because nobody, and I mean nobody, can time the market perfectly. When prices are high, your 100 buys a little less. When prices drop, your 100 buys more. It smooths everything out and takes the emotion completely off the table. Even better, set it to happen automatically. Turn on auto invest in the app and forget it exists. You can't get scared and bail if you're not even watching. The people who win at this aren't glued to charts all day. They're the ones who set it up once and let it run for years. If you run a side hustle, small business, or rental property, having the right structure matters. This is a paid promotion. Corporate Direct helps with LLC and corporation formation, registered agent services, and business structure support in all 50 states. Check the Corporate Direct link in the description. Part 6. Your Real Superpower, the game changer. This is the one I promised. Pay attention. The most powerful force in investing isn't money, it's time. Compound interest makes your money snowball. Money earns money, then that money earns money too. Hypothetically, if markets average 10% annually, $100 a month, about $3 a day, could grow to over $225,000 in 30 years. This is an illustration, not a guarantee. You only contributed $36,000. The rest? Compounding. Now the gut punch. Start at $25 instead of $35. Same $100 a month. You end up with $400,000 more. The only difference is you didn't wait. That's the real cost of I'll start later. It's not a small mistake. It's the most expensive decision you'll never see on a receipt. The best time to plant the tree was years ago. The second best time is right now, with the $100 you already have. Let's lock it in. $100 is enough. Fractional shares open the door. Open a free brokerage account. The boring trusted ones are best. Buy an index fund, not a lottery ticket stock. A Roth IRA lets your money grow completely tax-free. Automate it monthly and let compounding and time do the work. I'm curious to hear from you. What stopped you from investing until now? Are you opening your first account this week? Drop your thoughts in the comments. I read every single one. Remember, this video is educational only, not financial advice. Subscribe for more personal finance content. Thanks for watching.